Welcome back to the deep dive. We've been getting a lot of questions lately about Zillow.
Yeah, there's a lot of curiosity surrounding their recent performance.
Exactly. So today, we're diving deep into Zillow Group, Inc.'s financials. We're going right to the source, their latest quarterly report, the Form 10Q, filed just last week.
Fresh off the press.
It covers the 3 and 9 months ended September 30, 2024. So we're going way beyond those attention-grabbing headlines.
Getting into the nitty-gritty.
Exactly. And we know you want to know, how is Zillow really doing in this crazy housing market? What are their key performance indicators telling us?
Well, I think the first thing to remember is that the Zillow Group is a pretty big player in the real estate world.
Oh yeah, it's not just Zillow.com, right?
Right. They're the parent company behind a whole bunch of brands like Trulia, StreetEasy.
Oh, and don't forget Zillow Home Loans.
That's right. They're in the mortgage origination game, too. And they even offer software solutions for real estate professionals. It's a pretty diverse portfolio.
And their workforce has been growing.
Oh, yeah. It's up to 6,835 employees as of September 30th.
That's up from 6,263 at the end of 2023. What do you make of that?
Well, it's pretty interesting considering the state of the housing market, right?
That's a bit of a roller coaster.
It really has. Low inventory, fluctuating mortgage rates, inflation. It's a tough environment out there.
And yet, Zillow's total transaction value actually managed to grow.
That's right.
So let's talk revenue. For the 3 months ending September 30, 2024, they brought in $581 million.
That's a 17% jump year over year.
And for the 9 months ending on the same date,
They raked in $1,682 million, a 16% increase compared to last year.
pretty impressive numbers. So are they just riding the wave of a hot market?
Well, not quite. Their revenue growth is actually outpacing broader market trends.
Really?
Yeah, and they attribute some of this to their ongoing investments in their platform and services. It seems like their strategy is all about expansion and enhancement, and it's paying off.
So let's take a closer look at where that revenue is coming from. They break it down into 4 main categories in the report: residential, rentals, mortgages, and this catch-all other category.
Makes sense.
As you might expect, residential is still their biggest moneymaker.
Yeah, think premier agent services, advertising, and other offerings for folks looking to buy or sell. That segment brought in $405 million for the 3 months and $1,207 million for the 9 months.
Those are some big numbers.
Yeah.
But their rental segment, that's really been gaining traction lately, hasn't it?
Absolutely. Rentals pulled in $123 million for the quarter and $337 million for the 9 months.
It seems like they're really tapping into the growing demand for rental properties.
The report specifically mentions an increase in average monthly unique visitors to their rental listings. That definitely tracks with what we're seeing in the market.
Okay, so what about mortgages? We're talking $39 million for the 3 months and $104 million for the 9 months. It might not be as big as residential, but it's still a lot of growth.
It is. Zillow attributes this growth to the increased volume of purchase loan originations through Zillow Home Loans.
So they're really focusing on those purchase loans.
Yeah, it seems to be a key part of their strategy right now.
Interesting. And then there's that other category.
Right, which seems to include things like display advertising. It brought in a smaller amount compared to the others, $14 million for the quarter and $34 million for the 9 months.
Not quite as flashy, but I guess every little bit helps.
You got it. Even though other might be smaller, it adds to their overall revenue diversity, and that can be really important for stability.
Makes sense. So we've talked revenue, but what about those all-important key performance indicators?
The KPIs, absolutely. For a company like Zillow, things like visits and unique users, those are crucial for understanding how people are engaging with their platforms.
Give us the numbers. Are people actually spending more time on Zillow?
Well, visits were up 3% for the 3-month period and 4% for the 9-month period year over year.
So more people are checking out Zillow compared to last year.
That's what the data's telling us.
But hold on, didn't they switch up how they're measuring those visits?
Ah, you caught that. You're right, they did. They switched to an internal measurement tool for visits to Zillow and StreetEasy.
So how does that affect things?
Well, the numbers reported for 2023 are about 10% lower than they would have been under the old system.
That's a pretty big difference.
It is. So keep that in mind when comparing year over year.
Okay, so visits are up, but what about unique users? Are more people discovering Zillow?
Average monthly unique users increased by just 1% for the 3-month period, and they remained pretty much flat for the 9 months.
So more visits, but not necessarily more users.
Right, that's the takeaway there. It could mean existing users are just visiting the site more often.
Makes sense. So we've got visits and unique users. What other KPIs should we be paying attention to?
Well, for Zillow, loan origination volume is a big one. This tells us how Zillow Home Loans is performing, which of course ties directly back into their mortgage revenue.
And we know they're really emphasizing those purchase loan originations.
Right, and the data shows that this strategy is working pretty well for them. Total loan origination volume was up 79% for the 3 months, and a whopping 106% for the 9 months.
Wow, those are some impressive numbers.
They are.
So we're seeing strong revenue growth, their rental segment is booming, and Zillow Home Loans is exceeding expectations. Sounds like a pretty successful quarter for Zillow.
It does paint a pretty rosy picture, doesn't it?
It does. But we're only scratching the surface here. There's a lot more to uncover in this report that can give us a more complete picture of Zillow's overall position.
You know, I love digging deeper. For example, what about their adjusted EBITDA?
For the 3 months, it was $127 million, and for the 9 months, $386 million. But for those of us who don't speak fluent finance, what does adjusted EBITDA actually mean?
Well, put simply, it's a way to look at profitability that strips away some of the accounting complexities. So it gives you a clearer picture of how profitable Zillow's core business operations really are.
And in their case?
In their case, it suggests their core operations are pretty healthy. But there are a lot of other intriguing details buried in this report that don't always make it into the headlines.
Ooh, I knew you'd find some interesting tidbits. What kind of things caught your eye?
Well, for starters, their recent acquisitions. In December of last year, they acquired Follow Up Boss.
Follow up, boss. What's that?
It's a customer relationship management platform designed specifically for real estate professionals. And they paid a cool $399 million in cash for it. Plus, there's the potential for future payments based on performance.
Wow, that's a serious investment.
Mm.
So what does Follow Up Boss bring to the table? Why would Zillow shell out that kind of money?
Well, think about it. Follow Up Boss helps real estate agents manage leads, automate follow-ups, and track client interactions. It's all about efficiency.
That's important in any business, but especially in real estate where time is money.
Exactly. And get this, they also acquired REO in 2023.
REO.
They're a software company that focuses on real estate photography.
Interesting. And then there's Spruce, right?
Yep. Also acquired in 2023, they're a title and escrow platform.
Wow, 3 companies in just over a year. They've been busy.
They have. And it really paints a picture of where they're headed. They're building a comprehensive suite of services for real estate professionals.
It's like they want to create a one-stop shop for everything real estate.
Exactly. They're aiming to streamline the entire process for agents, from lead generation and client management, all the way to marketing and closing deals.
So they're not just a listing platform anymore.
They're aiming to be the go-to resource for every stage of the real estate journey.
Okay, so that's the big picture for real estate professionals. But what about the average person?
Good question.
What does all this mean for someone who's just trying to buy, sell, or rent a home?
Well, for the average consumer, I think Zillow is becoming a much more comprehensive resource. They're not just a place to browse listings anymore. They're aiming to provide a wider range of services and resources to make the entire process easier.
Sounds like they're trying to take some of the stress out of what can be a pretty complicated process.
Exactly. They're taking on the heavy lifting.
Makes sense. Anything else particularly interesting in the report?
Well, there's the fact that they have a $2.5 billion share repurchase program in place. As of September 30th, they still had $381 million left for future repurchases.
So they're returning value to their shareholders.
Right. And that suggests they're pretty confident in their future prospects.
Sounds like a good sign for investors. But let's not forget about those legal challenges they've been facing.
Right, those are still ongoing. The shareholder derivative lawsuits related to the closure of Zillow offers are definitely something to watch.
Zillow offers, that was their attempt to get into the home flipping business, right?
Yep. And it didn't quite go as planned. These lawsuits raise questions about the company's risk tolerance and their ability to accurately predict what's going to happen in the market.
It was a bold move, and it will be interesting to see how those lawsuits play out.
Definitely. And then there's also that ongoing patent dispute with IBM.
Right. What's the latest on that?
Well, IBM actually voluntarily dismissed most of its claims back in March.
Oh, so it's settled.
Not quite. There are still some claims related to a patent that's currently under appeal.
So there's still some legal stuff going on.
Yep. It's a reminder that even when a company is performing well financially and strategically, there can still be challenges lurking around the corner.
So Zillow is this dynamic, innovative company But they've got some baggage they're carrying too.
Right, it's all part of the story.
And speaking of the story, this is just the beginning of our deep dive into Zillow's world. We'll be back after a short break to explore their ambitions even further.
Can't wait.
Okay, so before the break, we were talking about Zillow's ambition to be more than just a listings platform.
They're really trying to build this comprehensive ecosystem for real estate professionals.
With these recent acquisitions, it seems like they want to support every stage of the real estate journey.
Right. From finding and managing leads to marketing properties and closing deals.
So we've got Follow Up Boss, REO, and Spruce. 3 major acquisitions in a pretty short time.
And they all fit together like pieces of a puzzle.
What's the big picture they're trying to create with these acquisitions?
Well, they want to be the go-to solution for agents and brokers, offering everything they need in one place.
So it's about streamlining the entire process for real estate professionals.
Exactly. No more juggling multiple platforms and tools. Everything's integrated, everything's connected.
Okay, let's break it down. What do these acquisitions actually bring to the table for real estate professionals?
Well, take Follow Up Boss, for instance. It's a really powerful CRM that's designed specifically for real estate agents. Customer relationship management. It helps agents keep track of their leads, automate follow-ups, and manage all their client interactions.
Ah, so it's like a super organized digital assistant for real estate agents.
Pretty much. And when you integrate that kind of tool directly into Zillow's platform, it can be a game changer for agents.
I can see how that would make things a lot more efficient.
And then you have REO, which plays a big role in marketing.
REO, the real estate photography company.
That's the one. They specialize in high-quality photography and virtual tours for listings. And we all know how important visuals are these days, right?
Oh, absolutely. High-quality photos and virtual tours can make a huge difference, especially online, where most people start their home search.
Right. And by bringing REO into the fold, Zillow can offer agents a really seamless way to enhance their listings.
Make them stand out from the crowd.
Mm.
And then there's Spruce, which seems to be focused on the more technical aspects of a real estate transaction.
Yep, Spruce handles title and escrow services, which are essential for closing any real estate deal.
And they're bringing that expertise into the Zillow ecosystem.
Exactly. By integrating these services, they can make the whole closing process faster and more efficient for both agents and their clients.
Okay, so it seems like the main theme here is creating a smoother, more integrated experience for real estate professionals.
That's the big idea.
But what about the average person?
Home buyer or seller.
Exactly. How does all of this impact the consumer side of things?
I think the key takeaway for consumers is that Zillow is evolving into a one-stop shop for all their real estate needs.
So they're not just a listings platform anymore.
They're offering a wider range of services and resources, all aimed at simplifying the process of buying, selling, or renting a home.
So they're trying to make things easier for people who might not be as familiar with the ins and outs of real estate.
That's the goal. They're taking on some of the complexity and making the whole experience more user-friendly.
Sounds like they're trying to demystify the real estate process. Okay, so we've talked about the positive side of things, but we can't ignore those legal challenges Zillow is facing. Those lawsuits are still out there, right?
Oh, absolutely. Those lawsuits are a reminder that even the most successful companies can stumble.
Especially in a market as unpredictable as real estate.
Right. And the shareholder derivative lawsuits related to Zillow Offers are particularly interesting. Remember, Zillow Offers was their attempt to get into the iBuying business.
Oh yeah, they were going to buy homes directly from sellers.
Exactly. But it didn't work out the way they had hoped.
It was a bold move, and it didn't pan out.
And now they're facing these lawsuits that question their decision-making process and their ability to assess risk.
It'll be interesting to see how those lawsuits unfold.
Definitely. And then, of course, there's that ongoing patent dispute with IBM.
Which is still under appeal, right?
Right. Most of the claims were dismissed back in March, but that patent dispute is still ongoing.
It's a reminder that the legal landscape can be just as complex as the real estate market.
You got it.
So Zillow is this forward-thinking company, but they've also got some baggage they're dealing with. What do you think this means for their future?
Well, it's clear they're not afraid to take risks and try new things. They're constantly innovating and pushing boundaries.
Which can be exciting, but also a little risky.
Exactly. But I think that's what makes them so interesting to watch. They're not content with the status quo.
They're always trying to shake things up.
Yeah.
So for you, our listener, the question is, do you think they have what it takes to truly revolutionize the real estate industry?
They're certainly aiming high.
It's a question worth considering as we continue to explore their journey. And that's exactly what we'll do after a quick break, so stay tuned for more insights into the world of Zillow. We're back and ready to wrap up our deep dive into Zillow Group Inc.
It's been fascinating to explore their journey from those early days as a listings disruptor to their bold move with Zillow Offers, and now they're pushed to create this all-encompassing real estate ecosystem.
They really have been pushing boundaries,
Yeah.
always trying to innovate and shake things up.
And that's what makes them so intriguing.
So as we look back on everything we've discussed today, what are your key takeaways?
Well, I think it's clear that Zillow is a company in constant motion.
They're definitely not sitting still,
They're financially sound, strategically focused, and they're not afraid to take risks.
which can be a double-edged sword, right?
It can be, but it also suggests they're adaptable, which is crucial in a dynamic market like real estate.
I think that's a key takeaway for our listeners.
Adaptability and innovation are essential for success in today's world.
And Zillow seems to have both in spades.
They do. And it'll be interesting to see how they leverage those strengths as they continue to evolve.
It's a journey worth following. And for you, our listener, we encourage you to keep exploring, keep asking questions, and form your own opinions.
The real estate industry is constantly changing, and Zillow is right there at the forefront, driving that change.
Thanks for joining us on this deep dive into the world of Zillow Group Inc.
It's been a pleasure exploring their story with you.
We'll see you next time for another in-depth look at a topic that matters to you.